Managing our IRAs, 401ks, and other retirement savings accounts should not be an overwhelming process. And reaching out to our current financial advisor or reaching out to a prospective financial advisor to place our IRAs, 401ks, or other retirement savings accounts with also should not be an overwhelming process. But unfortunately, I have found that it is for many Americans. And it's for that reason that I've put together these 5 simple questions that we can ask our financial advisor or a prospective financial advisor. And of course, we can always self-manage or self-direct our retirement plans. So a lot of Americans are not familiar with the fact that they don't have to be at the mercy of the traditional financial markets or fixed income securities. They can diversify beyond those asset classes and invest in assets like real estate, apartment buildings, trust deeds, mortgage notes, private equity, venture capital, physical assets like gold and silver, or even digital assets like cryptocurrency. So that leads us to our first question, which is, what do you do as a financial advisor during times of economic despair? Now, of course, during times of economic prosperity, things are going well. A lot of Americans aren't spending a whole lot of time looking at their retirement savings portfolios. But during times of economic challenge, oftentimes there's more focus on their portfolio and what's happening. So the question is for the financial advisor is, what do you do with your clients? What types of planning do you do during these challenging times? And the information and their reactions should give you an idea of what that relationship is going to look like going forward during times when your portfolio is underperforming. I'll give you a quick example or story about this. I had a client reach out in 2022. And they really weren't a client at the time. They were interested in looking into self-directing their IRA or 401k into alternative assets. And at that time, they had an IRA with a traditional financial advisor that had the money fully invested or had the portfolio fully invested in the public markets. And unfortunately, in 2022, this individual, like many Americans, had suffered severe losses. Now, this was an individual that just 10, 11 years ago suffered some really severe losses in the Great Recession, and now they were going through the same painful process. So he reached out to his financial advisor because he wanted to have a conversation about taking between 10 to 15% and moving it into a self-directed IRA so that he could begin investing in some private equity, some private direct investment transactions. So these are non-stock market-based investments. And his financial advisor's reaction, this individual's words, not mine or interpretation, was not so favorable. In other words, the investor was not satisfied with the financial advisor's response. And so he started with only wanting to move 10 to 15%. He called me back. He said, unfortunately, my advisor did not react positively to this, told me that I just need to stay put and there's no other strategies or tactics that I can utilize. That did not go over well with this investor. So he went from only taking 10 to 15% to taking 100% of his IRA portfolio and moving it over into a self-directed IRA so that he could take control and manage and invest it into the assets that he deemed as a best fit for his portfolio, not what the financial advisor was communicating to him. Now, let's show some sympathy, of course, for financial advisors and planners across the country, because the reality is when there are these massive market corrections and there's challenges in the economy globally as well as in the United States, many Americans suffer. So I want to make sure I emphasize the sympathy that we want to show to all Americans and individual financial planners and advisors out there. But the reality is you don't have to rely solely on a financial advisor or solely on the traditional markets. You have the ability to self-direct into what we refer to as alternative investments or non-stock market-based investments. Now, that leads us to question number 2, which is, what financial products does your financial advisor offer, or what financial products can they sell you? Now, certain advisors, certain wealth management consultants can only sell certain investments. So if you go to a financial advisor or planner and you say, I want to invest in real estate with my retirement plan, they're likely not going to be able to allow you to buy, let's say, a single family residential property where you direct the funds on your own. Now, they might be able to offer you a real estate product like a publicly traded real estate investment trust maybe a private real estate investment trust, but in many cases, traditional wealth management consultants and financial advisors can only offer public type assets. And so if you're somebody that's not all that confident in putting 100% of your portfolio in the public markets and you prefer the private markets, that's where you need to look at migrating and diversifying into a self-directed IRA, which will allow you to take control and invest in the private markets. So financial advisors and wealth management consultants, the companies that they represent, generally speaking, only have certain financial products that they can offer you. All right. So you're going to sit down and have a conversation with them and look at just the products that they can offer you, not all of the other financial products that can exist out there in the universe. That's where self-direction comes into play. And I encourage folks to do their own due diligence and look at all of the options that exist, not just the options that exist with that individual company that you're working with and the financial products that that financial advisor can sell you. All right, question number 3 is, what competencies do you have as a financial advisor or financial planner with respect to retirement savings accounts? So this is a retirement savings account focused channel. We talk about IRAs, 401ks, other retirement plans. And so if you're looking to invest your IRAs, 401ks, other retirement plans, and you're going to work with a financial advisor, you want to make sure that they have some strong competencies around how IRAs function, how much you can contribute, eligibility, non-deductible contributions versus deductible contributions, the pro rata rule, backdoor Roth contributions, SEP IRAs, solo 401ks, have a strong understanding with respect to retirement savings accounts. Not all financial advisors have strong competencies in those areas. So it's important that you ask the questions. That's not a bad thing. Certain financial advisors focus on certain aspects of financial services, and others focus on others. And there are some that are stronger in retirement savings accounts and work with more folks with IRAs and 401ks and other retirement plans, and other advisors that work more with, we'll call it, taxable accounts. So that's why you want to do your homework and ask these questions. Now, how can you get more information on this when you're talking to a financial advisor? Well, you can ask them about their credentials beyond their licenses, their investment or securities licenses. So for example, there's a designation called Certified Financial Planner. You'll see CFP. In fact, the advisor would likely have after their name in their email signature, or if you go on LinkedIn and you look at their name, you should probably see CFP listed after their name. It's a higher level, if you will, of education that they have to go through in order to qualify to be able to put those letters after their name. And so that can be an indication to you that that individual has more training and more understanding with respect to retirement savings accounts. There's also another designation referred to as the Chartered Retirement Planning Counselor. So you can look that up as well, or ask them about their background with that. And then, of course, there are questions such as, what is your background in finance? Academically, did you study finance? What do you do personally from a financial management perspective? All of those questions can be helpful and prudent for you to ask. You know, some folks I've heard where they'll speak to or interview a financial advisor, and they learn that that financial advisor, their background was that they are a career sales professional. So they've worked for different companies selling different types of products, whether it's mortgages, financial products, vehicles, whatever it may be. But they don't necessarily have a strong background in finance and understanding the financial markets. So important to ask these questions so you can make sure that you're paired up with the appropriate individual. I've had some folks that have come to me that say, well, I am working with a financial advisor and I'm a little bit reluctant to move my money into a self-directed IRA because I know this individual from a community event that I continually routinely attend, or it's a family member. Keep in mind that this is your hard-earned retirement savings, and you can self-direct, and you need to make your own decisions that are most prudent for you, not based on a relationship, so to speak. All right, that leads us to question number 4, which is, what qualifications do you have? So this goes back to what I mentioned about competencies with IRAs and retirement plans. So qualifications, first and foremost, anyone who is selling investment products, they are required to be licensed. And there's different licensures that they would have based on the securities that they're selling you. Now, in order to do some fact checking and due diligence, you can go to a resource called FINRA.org, FINRA.org. This stands for the Financial Industry Regulatory Authority. This is the regulatory authority that oversees financial advisors, financial planners, individuals that are selling investment products. All right, remember, these investments are considered securities, and securities, there's oversight by the SEC, FINRA, and other agencies. So you can go to FINRA.org, and there's actually a button when you go there that says broker check. And you can click broker check, and you can type in the name of the financial advisor that you're working with now, or a potential financial advisor that you want to work with. And you can look up their background, make sure that they're licensed, make sure they're in good standing. If there's any complaints that are pending against them, or previous complaints that have been filed but since dismissed, or maybe still pending, you can see all that information. So that can be a great resource for you to do your due diligence on the individual that you're looking to work with. All right, that leads us to the last question, question number 5, which is, how are you compensated? Compensation is very important. There are financial advisors that are more transactional-based compensated, meaning when they sell an investment product to you, they get a commission, if you will. They get compensation. And then there are folks that are more based on assets under management. You'll hear that term AUM, assets under management. And you'll also hear the term fee-based planner. So this is what we're talking about. They would take your entire portfolio, the balance of that portfolio, and they would apply a percentage, and that would be the fee that they would receive as the financial advisor that's overseeing your retirement portfolio and giving you advice, guidance, and management. So it's important to understand compensation, because the compensation of that financial advisor will often dictate how their goals are aligned with your goals. So the fee-based planner, the percentage with assets under management, as your portfolio grows in value, they're going to make more money. If it depletes in value, they're going to make less money. So the argument is, with a fee-based planner, that their goals are more aligned with your goals. All of that being said, it's important to understand that financial advisors, financial planners, some will be very open to you self-directing your IRA or 401k into alternative assets like real estate, and some may not be open to those concepts. So I'd encourage you to share information with them, or even connect them with the alternative asset custodians, such as Equity Trust Company, that you want to do business with, that you want to work with. I have had the opportunity to work with thousands of financial advisors and planners across the country. I have a great relationship with thousands of financial professionals across the country, because many of those financial professionals acknowledge that their clients want diversification into alternative assets like real estate or private equity. And some of those folks, they don't take 100% of their retirement portfolio and move it to Equity Trust to self-direct into these alternatives. They take just a percentage of their portfolio. And so that advisor is still working with that individual and is still very much involved in their financial planning process, which of course can be a really great thing for many individuals, including the advisor, the client, and if you will, it can potentially be a win-win-win situation for everybody. Remember that story I told you at the very beginning, which is a great lesson for investors as well as financial planners. The financial planners that are open-minded to this self-direction concept, often those are the advisors or planners that still end up being able to work with that client going forward, opposed to the example I gave you before, where that client took 100% of their portfolio instead of just 10 to 15% and moved it over into a self-directed IRA. So the lessons to be learned here, of course, ask these questions. It's a simple roadmap for you. Make sure you do your due diligence on your financial professional. Make sure you do your due diligence on investing in alternative assets. That is, assets beyond the traditional financial markets. I hope you got a lot of value out of these 5 questions. I hope you use these 5 questions in interviewing your current financial advisor or a prospective financial advisor. Until the next training video, as always, keep leveraging compounding interest in the absence of taxation.